Hey everyone, this is Chris, and this is your daily Uncut News. So we got to start with this. This is the hurricane in Florida. Hopefully you guys are doing okay if you're in this thing or you have friends or family members. I was looking at this picture, and it actually looks really quite scary. This is the center of the storm, or the eye of the storm, I think is a better way to say it. And you can see these blue sort of flashes. That's lightning. I've been seeing these images from satellite, and it looks really, really scary. I guess 2 million people are without power, so there were, if you have friends or family, you may not have heard from them the last couple of days if they don't have any power. So hopefully people are okay and everything's all right. So just wanted to bring that up first. Moving on to the markets. If you guys are paying attention and you probably saw that the Bank of England bought a whole bunch of bonds, and basically I think it's all a Ponzi. So watch my video if you haven't seen that already. And it was crazy because the media was so swingy. And the same with many people on YouTube was also very swingy. And it kind of just shows that either they don't know what they're talking about or they're lying to you. And because I heard many people say, oh, everything's going to be great. Everything's going to be great. And it's risk on. And then I wake up today and it's like, sentiment is risk off. It's like, okay. So every day it's just up and down, up and down. And this is sort of I want to remind you that you want to have a thesis of sort of what your thinking is about the markets. And so I show you kind of my thinking and what I'm looking at, and it sort of give you a baseline of what to look for, opposed to going with the day-to-day swings. The thing with the UK is it's really quite interesting. Is this is a long-running thing, and that's why I want to say please watch the video that I did on this because it's a complicated issue. But this is not just a one-day thing that led up to essentially crazy high tax cuts, and also to the essentially crazy high inflation, and also to the buying back of bonds. The reason why I mention this is because this is another example. I saw this one as well. This is just coming out from the media, where there's basically poo-pooing on crypto, because it's kind of funny is that again, you want to have a thesis on why you do things, because it was just a couple months ago where everyone was like, oh my God, Bitcoin's going to go to $1 million, Bitcoin's going to go to 2 million, or whatever ludicrous numbers, and now we're poo-pooing on it. And so if you don't have a thesis to begin with, you're just going to get caught up in whatever sort of the, I guess, trend or hoopla at the moment is, where I was never bullish on crypto, right? And I ended up being right on that. And so if you flip-flop around too much and following those kind of trends, you really face a lot of risk. So I just want to say that it looks like the media's definitely turned on crypto. So why crypto won't make you rich is the headline. But regarding the UK thing, the trend, which is actually really quite interesting if you look at this. So back in like 1925, this is going all the way back, of a pound to dollar exchange. And it was like, I'm looking at the chart here. They're saying like the pound was like basically 5-to-1 to the dollar. And when essentially the news came out that the pound has reached like these lowest levels in like, it was like 37 years kind of thing. And you look at the actual chart though, it's just been on a decline for years. You guys can see it right here. And so my guess that it may reach parity, meaning like 1 pound is $1. And it's kind of interesting because for those of you who are looking to live abroad, or looking to travel, now's the time to do it. That's why we came to Korea. The dollar's really strong. And England, in fact, would be a really interesting place to visit, because normally it's like ridiculously expensive to go there. But for Americans now, you can actually go. And one of the things that is really quite interesting when you compare the British system to the U.S. system, the way that they how can I say, think about it is really, really different. The reason why I mention it is look at these numbers here. So here, we're talking about that people are worried that the UK is deficit spending, right? They just have a ton of tax cuts. And essentially your budget deficit now is 4.5% of GDP growth. Is sort of the projections. And then by 2030, your debt to GDP is 101%, okay? So keep these numbers in mind. I want to show you the US numbers to show you how they compare. That's why it's so funny how like we're freaking out that UK is these numbers compared to US. You'll see why I'm saying this. Also too, if indeed that inflation keeps going the way that it's going, and if the Bank of England is really serious about controlling this thing, some of the projections is that interest rates will go up to 6% there, and then the housing market will fall 15%. So these are some pretty stark projections. I don't know if you want to call 15% a crash. I'll leave that up to you. But that's really one projection that's come out, and that was from Credit Suisse. Now, going back to the idea of budget deficits in UK, right, 4.5%, and then GDP to debt ratio 101%. In the USA, we've been running budget deficits for quite a long time. So you can take a look at this here. This is to give you guys an idea. So in 2020, we had a budget deficit of 14 negative, right? 14.49%. So that's a bad thing. 2021, look at the numbers right here, negative 10%. So, and I'd have to look at UK numbers to compare, but basically in 2022, we're looking at a budget deficit of 4.78%. So essentially, the American government, the way we do our budget is we spend more than we take in. I don't think it makes sense, and if you're scratching your head, it doesn't make sense. No, it doesn't make sense, and it doesn't make sense because it's like we're just spending too much. And the thing is with the UK, the reason why the USA can do it, I'm not saying it's a good thing. I'm definitely not saying that at all. Is we're really concerned about the growth in UK. That's a big difference. So the USA, people are more, even though we have budget deficits, people are more sort of feel more confident that the American economy can grow. Whereas the UK people aren't so confident. And so that's why they're taking like these drastic measures of these crazy tax cuts. You see the light blue there. That's basically showing you this is the second biggest tax cut in history. And the last one was 1972. That's why they said it was like the biggest tax cut in 50 years. And it's actually really quite interesting when you look at this chart of like when they either cut taxes or raise taxes. This stuff is really, really swingy in the UK. And I'd love to hear from people who are in the UK. We have a lot of people who watch this from England. Love to hear your thoughts on each of these sort of swings between cuts to raises. And it looks like Howe in the early 1980s was really quite nuts. This is your chancellor. The other thing, too, is going back to the USA thing. I always want to do this for comparison. So when we're worried that the UK will have a GDP ratio of like 101%, here in the USA, or in the USA, I should say, in 2021, they're running a GDP ratio of 137%, which is not a great thing. And this is something that it's always strange to me to where when I told you guys about our whole money system, et cetera, it always feels like it's about ready to collapse and it's unsustainable. Because when you see these kind of numbers, you're just like, oh my God. And I've talked about the national debt several times, and it's both parties. It's either the Democrats spend too much money or the Republicans cut taxes too much. The end result is your deficit spending, as you can see in the chart. So I just wanted to bring that stuff up because when we're talking about the UK system as being like panic mode, it's like, have you looked at our USA numbers? They've been bad for years. So I'm not saying it's a good thing. It is not a good thing, either UK's numbers or USA's numbers. But I want to understand that deficit spending I don't think is a great thing. And also, too, running high debt to GDP ratios is not a great thing. You'll hear different opinions on that, but I'm giving you mine. Regards to Treasury yield. So when we talk about is the market going to run, is the market not going to run, keep an eye on these things. So first, the 2-year is at 4.21%. The 10 years at 3.83%. As long as the 2 years above the 10-year, generally signals recession. So it's been like that for a while now. I can't remember how long now, but maybe we'll say 3 weeks or something like that. And it also signaled that earlier this year, I think around March. Then the 12-month at 3.93. So the basic gist of it is like, would I rather be in stocks that could go down, say 10, 15%, or would I rather just take 4% guaranteed? Now, certainly stocks could run, and you may see some people say that. I would say at this point you might be looking at on the bullish case, maybe 10% upside, maybe, and just give you just general idea, and then maybe a downside risk. Some people say as much as like a 50% downside. It could be, but probably more realistically, maybe like a 15%. But again, no one knows. But this is just give you some sort of guideline. I would say as long as the 2-year is above 4%, it's tough to be bullish on stocks. I think that's just a real good thing to take a look at. Also, too, another way to think about stocks as well. You look at the S&P 500 ratio. The PE ratio is like 18.79. When the mean and the median are closer to 16, it shows that we're trading a bit high. And the only way to get the ratio to be more realistic to where stocks are attractive is you want your bond yields to be lower, right? And then you want your either your earnings of companies to go up, or you want the price of stocks to go down, right? That's how this works. And remember, we got the news yesterday that Apple essentially cut their orders, meaning that people aren't going to be buying so many iPhones. And I said that was one of the key to the markets is, do you think Apple's going to sell a bunch of phones? Because if they're not selling phones, they're not going to make any money. And that's the end. That's it. They're not going to make any money. So it's hard to be bullish on a stock or a company if they're not making money. So we already know that Apple's not going to be building these things. They've already cut their orders. This is just a chart of the debt to GDP ratio again, 127%. Also, too, another number I want you guys to keep an eye on. Remember that unemployment is currently at 3.7%. I've been telling you guys it needs to be higher in order to control these things, right? So, you're probably looking at the Fed funds rate to be maybe 4.5%, something like that, and in that range by next year. And you need unemployment to be maybe 5-6% to control inflation. It could go higher, it could go any number, but I would say you're probably looking around 5%. So right now, unemployment at 3.7 is still too low. So this is what the feds are looking at. And you'll know this stuff because they even say it. I've been telling you guys about this stuff, but you want to give you guys some concrete numbers so you can have a general idea what to look for. Now, everyone's numbers are going to be slightly different, but it still needs to be higher at the end of the day. So this was Fed Bostic, and he was talking about that looks like the talk for November is actually a 75 basis point rate hike. So again, they're looking at raising rates again by 0.75%. So they're still remain hawkish, right? So it's hard to fight the Fed. It's not a good idea. Basically, meaning that when they're raising rates, bond yields are up. There's stocks it's going to be weak for them and they're weak for the market. And in fact, if you take a look at this. This is coming out. They're saying, okay, some people are looking for a 4.4% inflation, or sorry, unemployment, right? So I'm telling you 5. They're saying, say, 4.4, and we're kind of in the same ballpark. But regardless, at 3.7 unemployment is just still not high enough to where inflation can come down. And remember, why do we need unemployment? If everybody's working, then essentially you got too much money in the system. Also, too, if employers are like still willing to pay people more money, meaning like, hey, we'll pay you whatever it takes to get you back to work and get you into the office, etc., that drives prices up, right? So essentially, it's either employers are going to just quit hiring people because things are too expensive, or they're going to just start laying people off. I think people are going to start to get laid off is my thing, and we've been talking about this for a while. Also, too, is this was we're getting to the Nord Stream. This won't make headlines, but there's a fourth leak. So originally I told you guys there were 3 leaks in this thing, but now there's a fourth one. But like I said, it won't make headlines because there's so many other stuff to talk about. But do be aware that there is another leak. We'll see if there'll be a number 5. And it's pretty interesting because regards to energy and stuff like that, every country is going to be for themselves, right? Which is understandable. So already Australia, if you guys are Australian and watching the show, it looks like you guys made some sort of deal to get some energy going in your trade. I can see this right here. So it says you had a deficit of natural gas, but I guess now you're doing all right. It says you secured more natural gas for domestic users to avoid supply shortage. So evidently Australia knows what's up regarding natural gas. And so keep an eye on that, especially for people in Europe who are, when you see the Nord Stream problems, I'm sure each country's out for themselves to try to secure energy for the coming winter, which is going to be cold, of course, and people are going to need energy. One of the interesting things about this, though, which is it's tough to predict. This is just real with you guys. The price of energy, so the oil barrel, the price of energy of oil has been going down. And that hurts Putin because they get a lot of money essentially from selling oil, right? That's how they fund their war. And so this is one of the things that, why would they damage the Nord Stream? Who knows if they did or not? I'm just talking with you guys about it because we've had speculation that it was on purpose. The Nord Stream was essentially their explosions, but whether or not Russia did it, who knows? But one case you would make is that because they want energy prices to go up. I'd love to hear other cases about this sort of situation. And I'm just telling you, I have no evidence or anything like that of who did what. But we do know there are now 4 leaks in the Nord Stream. The other thing is, too, which I told you guys before last year, and I keep saying the same thing, but I'm just reiterating it. I just keep seeing reports over and over again that the U.S. is sending weapons to Ukraine. So obviously the defense contractors will benefit. Although there was I think it was the Atlantic Equities, they were not as bullish on the defense contractors, mostly because I think they said it might have peaked. But I'm not sure about that. We'll see. I will say, though, that, like I said, regardless of, I can't predict future 100, but regardless of anything that happens with recession and things like that, the U.S. government is always going to spend money on weapons. It's just a real thing. The other thing is, too, is after the war ends, it'll eventually end. I don't know when it's going to happen, but it'll eventually end. All the reconstruction companies will make money. So I've mentioned that to you guys. I'm just starting to see that. I think that, something's got to give, right? Either Russia's going to run out of money or they're going to escalate it more because they keep trying to draft more people and people are already running to the border. I can't remember the number was. It was a really high number. It was like 10,000 people a day are trying to leave because they don't want to be drafted, and it was something like 50,000 have already left. It was something of that nature. Regarding China, which we got to talk about as well, it was interesting because there's been a sell-off in stocks. People are just kind of worried. And one of the things that is going on, if you guys remember, there's negotiations between the U.S. and China regarding accounting and regarding transparency. Now, if you guys understand what's going on, there's a couple things going on. So one is the U.S. and China are essentially fighting over what's the status of Taiwan. Now, from a U.S. perspective, we want to trade with Taiwan. There's a lot of companies there. We have company connections with Taiwan, essentially like Taiwan Semiconductors, et cetera. China also has economic ties there as well, and Taiwan obviously just wants to stay open for business and not lose their freedoms if the Chinese People's Liberation Army comes in and tries to take over everything, right? And we've already made promises to send. I want to say it was $4 billion. I saw a couple different numbers. It got brushed under the headlines, but I'm just telling you what happened is the Congress had approved to basically send weapons to Taiwan. And so there's more discussions on what's going to happen with that. So I can't predict what's going to happen, but I'm just saying that there is discussion of that. And so the U.S. is signaling that they want to talk. The other issue is, which has always been an issue, is that we know that China is supporting Russia in this war. And there keeps being reports that the U.S. is considering more sanctions. Whether or not that means including China is anyone's guess. It's a tough thing, but there's more news about this as we go. Because this is one thing that I really want to emphasize with you guys. Remember, I told you guys before, if you follow the media too much, you get caught in these day-to-day swings. And I want you to understand that when you hear people on TV, they don't necessarily have your best interest. So, for example, this one here, this is like they had someone come on and who is it? It was the vice chairman of NASDAQ, and he was trying to say, hey, everything's okay over at NASDAQ, and we're going to bring in Chinese companies to go IPO, and we're going to be raising money, and everyone's going to be swimming in money. And he's trying to make you feel more bullish. Who knows? I just want you to know that from his point of view, him and his buddies want to keep the money flowing, right, from his point of view. However, if you actually take a look at what's going on regarding the accounting thing, now, whatever the end result is, right? So the USA basically says, hey, give me your full accounting books, because if you're a company trading on the public markets, people want transparency. People want to know what's going on with your books. They want to know if it's cooked or not. And the other thing that's a very real thing, and I've told you guys several times, let's explain it to you if you guys don't know. Basically, every government official in China, this is a real thing, they have financial ties with companies, right? And so there's either kickbacks or they sit on the board, any kind of things. It's just real, right? And bribery is also a very real thing. If a company wants to do something, you just bribe a politician. Now, what happens is that it's same in USA, even more so in China. Politicians do not want their financial records of which connections with which companies that to be released to the public. Nobody wants that. No one wants to say, oh, okay, so this politician has a connection to this car company, and then they pass legislation to benefit X car company. Okay, that's definitely corruption, right? So Chinese politicians don't want that. Now, the Americans have said that we want full transparency on your books, and I've always told you that regardless of what happens, there's probably going to be some BS going on, and this could just be all posturing for all we know, right? I have no idea if they're going to do a legitimate audit. And this is sort of why it's hard to stay bullish on Chinese stocks, because a lot of these books could be cooked and they could be completely fake for all we know. Because they're meeting in Hong Kong right now. The auditor should have gone to the headquarters of companies, be it in Beijing, be it Shanghai or Shenzhen, but no, they're going to meet in Hong Kong and they're going to bring their books with them. So it's all BS. And if you read the description, I'll read it to you guys and I'll explain why I think it's all BS. So here it is. They're meeting in Hong Kong right now, basically, to try to go over books of various companies, and there's 200 companies at stake. At PricewaterhouseCoopers office in Prince's Building and KPMG, right, these are your big accounting firms, office in southern Hong Kong, the two sides are facing off across conference tables or huddling in separate rooms to strategize, often late into the night, according to people familiar with the matter. So basically, you have these team accountants, and they're like, hey, show us the books. And then the other team goes to me, it's okay, what can we show them? This is the Chinese team. What can we show them? And then they bring a book, and then the Americans look at it. Okay, is this complete? I don't know. Is it complete? And that's what's going on. It's a cat and mouse game. I'm just telling you. And then listen to the next description. In the middle are auditors at firms, including PwC. They're fielding detailed questions from the PCAOB, that's the accounting board that oversees the stuff that's on the U.S. side, along with directions from Chinese authorities, that's the Chinese side, of course, on which information can't divulge because it's considered a state secret, right? So this is the key lines right here. So basically, they have like government officials in the room, and then you have a third party accountants in the room. So it's all BS, right? If it wasn't BS, then the accountants would just do their job. but you have government people from both sides there in the room saying, oh, can you show them this? Can you not show them this? That's why it's all BS, guys. Next, you can read this here. In some cases, Chinese officials have asked to black out names, right? Redact, black out names, addresses, and salary levels in company documents. So, like, you guys can see yourself. They don't want addresses of people to be released. They don't want to know how much anyone's getting paid. They don't want names there. It's all BS. So far, however, the redacted information has mostly been inconsequential to overall integrity of inspections that people add. That's what they're claiming. But I when I read that, I'm just like, I mean, come on. That's the most important part right there. Is the not only, okay, well, they're going to argue that no, you just need to see the books, right? But I'm telling you guys that the keys is you want to know that what the Americans' point of view is, like which companies are tied to which government officials, and also to what they want to know. This is really key. Is which companies have ties to the Chinese military, because the American Congress has said that we don't want American money to go to any company that has any ties to the Chinese military. So I hope you guys understand all this stuff. I know I'm talking about a lot of different things right now, but it may be all a bunch of BS, in my opinion. And so part of this whole thing, this whole charade is, okay, if you're an American company or you're American, you're like, you know what? I'm tired of this China BS. I'm going to start moving my operations to other countries. And I've told you guys the last few months or last year, whatever, China is not the place you want to be necessarily. It's going to be India and Vietnam if you're looking for developing country and you're looking for growth. And already you see these kind of headlines where Apple was looking at building stuff in China, in India, and then India is now offering, you can see incentives to bring Apple, and they're also looking at bringing Dell and a couple other companies. I was reading this as well. So we'll see if it'll end up being a competition between India and Vietnam, who can build the most American factories. Also, too, in the equity markets, there's this company. We looked at this one a couple days ago. This was the what's it called? The Leap Motor. When IPO is the EV company, and then we looked at their cars, and they look kind of ugly, to be further frank. And I was like, okay, I'm not into this one. And so I guess the IPO didn't really do that great. It failed. It went down by a third. And then in contrast, actually, which we talked about this one as well, the Porsche IPO seemed to be somewhat of a success. It looks like, I think this was in Germany where they did this, and the shares were above the IPO price. So it's kind of interesting, the contrasting in confidence in these kind of things. So I'd love to hear you guys' thoughts on that. And then in other news, if you may or not have heard, so I'm pushing 50, so this guy was close to my age, essentially. Coolio, the rapper, the Gangster's Paradise song, and he died, actually. So, for those of you who are fans, I just wanted to let you know that this is a thing, and I was a fan. I mean, like I said, I grew up with stuff in high school, and he's roughly my age. And the last news today, which is kind of a funny one and a bizarre one, there was this guy who's suing BetMGM, so it's an online gambling thing, and he's suing them for their practices. And the basic deal of their practices is that he's claiming that whenever he has a winning blackjack hand, they disconnect. It's so which is kind of ridiculous, right? And he says what happens is that he contacts the company. He's like basically going to win $100,000 on blackjack or something, and then he has a winning hand, and then the system disconnects. Like, it says like totally a scam. And so then he contacts them, and then they just give him like free game credits so he can keep playing. It got so much money that it was like it was $30,000 a month they were giving him free game credits. And as it turns out, the story is just so bizarre. He is the nephew of this other guy named Antar is the name. And his uncle was part of this Crazy Eddie fraud scheme where they cheated people out of, it was like a pump and dump, cheated people out of $74 million. So it is kind of funny. This whole thing is basically the nephew of a fraudster, convicted fraudster, essentially 7 years in prison kind of person, is doing online gambling and now claiming the online gambling company is cheating him. So who knows if that's real or not? But I do think the story is pretty funny. And he's basically suing him. He's like, yo, you're cheating me. And we're talking about big money here. And then the money that we're talking about here, I guess over 9 months, he placed $29 million in bets. So anyway, that's the story for today. So anyway, I always appreciate everyone watching. Hopefully all this stuff is interesting and entertaining for you guys, and hopefully helpful as well. And this has been your daily Uncut News.